All right, VIP traders, welcome back. These are the trading ranges for Tuesday, April 22nd. We also have Tesla earnings in after hours, so the implied move for that is at the end of today's video. And we are in SPY, we're on the 30-minute time frame, and the implied move today is between 505 and 523, and that is from options. The 30-day average volatility is 495 to 533. And on tomorrow's contract, 502 to 526. When we look at all three of those volatility readings, the average there is 500 to 528. Okay, so in today's implied move, we only have one level, and that is the 35 EMA. And actually, this down gap from yesterday is at the very top. So 35 EMA, always know where that 35 EMA is. And if you look where we are right in pre-market, we're sitting right underneath that. So definitely that level is going to be the first place to look. Right above that, the top of the implied move is 523. 526 on Wednesday's contract, that's all within the gap here. And then that 30-minute 200 moving average, which has been resistance, is at the very top of the implied move above the next 2 days implied move. So we are looking at a $3 wide difference between the two contracts, between the 0 DTE and the 1 DTE. So the spread that I'm going to be looking at least to start, is going to be 528, 531. Then to the downside, we don't have anything here, but the bottom of the implied move is 505 on the day, 502 on Wednesday's contract. Then when we average the three volatility levels, 500, that is definitely the strike that I'm going to be looking to. If we do drop, then the spread that I'm looking to sell is going to be 500, 497. And that is because we have a $3 difference between the two contracts. So 500, 497 is what I am choosing today. So this 30-minute time frame, that's definitely the time frame we should be trading. That is what is going through our trading range today. So 35 EMA, down gap above that. So 35 EMA, down gap above that. 30-minute 200 moving average. We're still bearish, so look to these levels as resistance. SPX. Implied move today, 50.75 to 52.45. 30-day average volatility, 49.65 to 53.50. Can you believe we are hitting those 4,000 numbers in SPX? The implied move on tomorrow's contract, 50.40 to 52.75. And then the average of the three, we have 50.25 to 52.90. Those are the strikes I'm going to be looking to. High probability short strike right there. And to the upside, that 35 EMA. Futures are up 1% right now, and that would take us most likely to right around that 35 EMA at open. And then we have that level right there, which did act as resistance. This is last week, Thursday. This is yesterday. Just kidding. This is Wednesday of last week, Thursday, and then today we gapped down. So right above that, down gap from yesterday. 52.45 is the top of the implied move. 30-minute 200 moving average coming down. 52.75 is tomorrow's implied move, and then that 52.90 is where I'm going to be looking at. And on today's contract, 52.90 is just underneath this 30-minute 200 moving average. And then since we have a $30 wide spread, I'm looking to 52.90, 53.20. And that puts me right in this downward momentum area. And then underneath us, 50.75, 50.40, 30-day average takes us down underneath 5,000. And if you remember yesterday, we did take it all the way down to the bottom of the trading range. So nothing here is something that we can't see. 50.25, 49.95 is going to be the spread that I trade down here. If we drop, that's around where I'm going to be trading. All right, QQQ. The implied move here today is between 425 to 441, 422 to 445 on tomorrow's contract. 30-day average volatility, 414 to 452. Now, I didn't add that average, so let's do that real fast. 414 plus 422 plus 425 is 1261 divided by 3. 420 is going to be the strike on the downside right here. Then 441 plus 445 plus 452 divided by 3 is 446. So 446 to the upside. So those are going to be the strikes that I look to. 420 to 446 is the most likely trading range for today. Implied volatility from options, 30-day average volatility from the charts, and we have that 420 to 446. Now to the upside, we have the same setup as in the S&P. We have 35 EMA above us, that down gap from yesterday, 30-minute 200 moving average, and we are bearish still. 35 EMA is underneath the 30-minute, so do expect some technical resistance there. 446 is just underneath this 30-minute 200 moving average right here facing down. So 446 would be the short strike that I'm looking to. $4 difference between the contracts here. So 446, 450 is what I'm going to be looking to today. Underneath us, 425 is the bottom of the implied move. 422 on tomorrow's contract. The average volatility from all three sources, 420. $3 wide between 0 and 1 DTE. So 420, 417 is my spread today. IWM, the implied move over here today, 179 to 187. 30-day average, 175 to 191. 177 to 188 on tomorrow's contract. Look at that downward momentum. It is so clear in the trading range. We have the same setup here, 35 EMA above us, down gap, downward facing 30-minute 200 moving average. We're up in pre-market, so we're above this 35 EMA. We're right here underneath this down gap and 30-minute 200 moving average. Let's get that average here. So on the downside, 175 plus 177 plus 179 is 531 divided by 3. That downside strike is 177, so we can keep that there. On the upside, 187 plus 188 plus 191 divided by 3 is 188. So IWM is 177 to 188. That's going to be the short strike. That's going to be the short strike on today's contract. So we have $2 down here, so that's going to be 177, 175. So right here, just almost as it's written, that's going to be the spread that I trade today, and then $1 here, so 188, 189 to the upside. So 188, you can see on today's contract, would put me right above that 30-minute 200 moving average with a little bit of room as well. So 188, 189 is up here, just underneath that Trump tweet gap right here. All right, and lastly, DIA. The implied move on the day today is 370 to 394. The implied move on the week, 381 to 403. You could see that yesterday we did close right within the implied move for the week. We are reaching oversold here. Right now futures are up, and they are up 1.8% right now. So pre-market takes us to 385, almost 386, and that is just underneath this 30-minute 200 moving average. Above that, we do have this down gap from yesterday. Top of that gap is at 391. So first level of resistance after the 30-minute 200 moving average is 391. Above that, the down gap from last Thursday. Top of that gap is at 397. Above that, the downward facing 30-minute 200 moving average, which is still facing down and still a resistance right now. And lastly, let's get Tesla in here today. We do have earnings in after hours today, and we do have a $25 implied move in each direction And that looks like this for Tesla, 202 to 253. And I did not build this chart out at all. So we do have the 30-minute 200 moving average right here. Okay, so right at the top of the implied move, we have the 30-minute 200 moving average. Let me label that. Okay, so let's also look real fast on the daily time frame. Where is the, there you go. So daily time frame, the 200-day moving average does have upward momentum, and this is a really weird setup because we have upward momentum here but a bear cross. So from this time frame, you could see that we are at a support level right here. And not only this year, but also last year, we saw support around this level. So 229, if we break this after earnings, that is significant. Down here, we do have a green signal line, and we came back down. This is a critical level right here. Let's see if we have support and move back upward toward that upward facing 200-day moving average. And this really is an interesting chart. We also have that resistance here with that 35 EMA on the daily time frame. So you may want to take that as well and add that to the top. If we see a crazy after hours move, that would definitely be a place to take some profits for earnings. 35 EMA on the daily time frame. All right. I was not prepared with Tesla at all. So this is that 35 EMA. Let's make that red. Okay, so that is what Tesla looks like today. And again, we are sitting at support. So if we break this today, just expect a breakdown. And we have this gap right here. Downward facing 30-minute 200 moving average. Daily 35 EMA above that, but that really wild upward facing 200-day moving average. So there you have it. We have a 10% implied move for Tesla today in after hours, and everything else that you need to make today amazing, make a ton of money, have fun, trade safe, make sure you take profits when you're up. I will see you guys today after markets close.